5 ways to prepare for a global market crash. Welcome to Momentum Property Education, and today we're looking at what are we going to do with the economy right now. I mean, everywhere you look, it feels like everyone's talking about how the market is about to crash, how we're going to have one of the worst crashes in history. And I mean, there are facts to back this up. You know, the US just raised their debt ceiling again. China is in turmoil with the Evergrande crisis. You have the global energy crisis. You have the global supply shortage because of the shipping and trade crisis. You have runaway inflation. You have the overprinting of new money, which is obviously a big cause of that inflation. And you have that ever-present threat of the pandemic flaring up and we having to go back into lockdown. So what are we supposed to do? What are we supposed to do when it feels like the whole world is going crazy? But you know what? There's a flip side to this as well. On the other side, if you look at what's happened since lockdowns have been released, the markets are really, really growing. We're having great growth all over the world. We see that consumers are spending more than they have since, before the pandemic. That is huge. And private families, consumer savings are in better shape than they've been for a long, long time, which means there is more money to spend, more money to push this growth, which is really, really, really good. So we're seeing that the economy has a lot of pressure up as well. Prices are going up. House prices are going up. There is value in the market. People are spending. People are getting out there. Companies are hiring like never before. So how do we reconcile these two views, right? That the crash is guaranteed and that everything is going to go south and that the market is actually growing and we have an expansion in the market. So to me, it doesn't really matter who is right? Because over a long enough period of time, they both will be, right? I remember a story. Tony Robbins shared this story of one of the top financial analysts of the 1990s. When he retired, they interviewed him, and he said, when they asked him, so, well, look, you are one of the most skilled financial analysts of the past decades. You seem to always be right. When everyone else was wrong, you were always right. What was your secret? How did you do it? And he smiled and he said, well, I guess since I'm retiring, I can finally reveal my secret. And they said, oh, that's amazing. What did you do? How did you predict the future? He said, well, what I did was I always predicted growth. I said, what do you mean? Well, what I did was I always predicted growth. So no matter what was happening in the market, I said the market is going to grow. And what happened was if the market crashed, they would all point at him and they'd go, oh, he's wrong, look at him, what a lousy prediction. He said, no, just you wait. I predict growth. And, there would be doom and gloom and fear. And then, a while later, they'd ask him again, so see, there's still a crash. What are you talking about? No, I still predict growth. I see big growth in our future. And sooner or later, the market turns and there was huge growth. And they came to him and said, wow, throughout the crash, everyone was saying the market is over. But he was right. He predicted growth. And for decades, he pulled this off, right? So for me, both sides are always going to be right. You can be predicting a crash for 10 years. Sooner or later, you'll get it right. Same thing, you can predict growth for 10 years. Sooner or later, you're going to get it right. The question is, what do we as investors do to stay safe whilst they're wrong, right? So if you're betting on growth, if we in the meantime have a crash, how do you stay safe? How do you stay secure? Well, let's look at that together. We're going to check out the whiteboard. We're going to work on it together and figure out a strategy for how to stay safe. So you ready? All right, let's go. All right, so what do we do to stay safe? Well, I'm going to show you a simple method to make sure that whether the market is going up or the market is going down, you win. All right, you ready? All right, so what's important to understand is that in each of these situations, obviously very different things are happening. So to do this, we use 5 primary type of assets, all right? So let me list them out for you. So you got cash, you got real estate. All right. You got stocks, cryptocurrencies, and commodities. So cash, real estate, stocks, cryptocurrencies, and commodities. Now, we know certain things about these types of assets, and they act in different ways if the market is going up or the market is going down, right? So now what we're going to look at is how do you combine these to keep yourself as safe as possible. Now, I'm not going to give you fixed percentages because that will be up to you. What we're going to do is we're going to look at how do these different assets act so that you can start thinking. That's our job here at Momentum Property Education as we see it. I'm not here to tell you if the market is going up or going down because, quite frankly, we don't know. We look at the signals, right? We look at what are the signals saying it's going to go up? What are the signals that are saying it's going to go down? Same thing. We are not sure what's going to happen exactly with each of these assets. We try to combine them in a way to keep us safe and keep us winning either way. And that's what I want to show you here today so that you can do the same for your portfolio. Now, there's an important 2 points I want to make before we get into the details here. The first is that, well, it's actually from a presentation that I heard from Robert Kiyosaki. He said that most investors see the market as it's a bet, right? You're playing against the house. You either win or you lose. See it as a coin flip, right? It lands up, you win, lands down, you lose. Well, what you got to understand is as an investor, our job is to stand on the tip of that coin. And whichever side it drops, we got to position ourselves as a winner. All right. So that is one of the most key parts to this. And that's what we got to understand going into this analysis. All right. So if we look at these 5 asset classes, we look at cash. One thing we always know about cash is that in the world, the way that our world is today, we always have inflation. Okay. So whatever happens, if the market is going up or the market is going down, cash is slowly losing value. So it's not a good long-term store of capital because it's slowly going to lose value, right? For every year, milk gets a little more expensive. So you don't want to be sitting there holding cash unless the market is going down. Because what will happen with the other types of assets is they will lose their value quicker. So you want to hold cash when a market goes down. You want to be spending that cash, have spent it when the market goes up. Does that make sense? All right. So that's what we want with cash. Cash is a great way to guard against a crash. The more cash you have on hand, there's a crash. You can buy when it's low in value, when these things are cheap, and you take the win up. So you want to have some cash. If you're unsure, like right now, we want to make sure we have some cash on hand. So make sure you have some savings there. Now, real estate is really, really interesting. If real estate is in a boom, right? If the market is going up, the prices are going up, then real estate is really, really fun, right? You buy a property. By the time you've completed the purchase, it's already gone up in value. You refurb it, it's gone up in value again, and life is good. So if you're doing flips, if you're buying and holding and refinancing, booming market is great for real estate. In a crash, though, if market values are going down, it's not fun to be flipping, right? Meaning buy, refurb, and sell. You don't want to be trying to sell because by the time you agree the purchase, by the time the completion has gone through and you buy the property, the value's actually gone down. So you're already paying an overprice, even if you got a good deal. And that keeps on going. Though real estate can be really well if you're not flipping, if you're holding the property. Because even if the values are going down, what happens in the values going down, that's because people are forced to sell. And they're forced to sell because they're losing their jobs, because there's a downturn. Where do these people have to go? How do they live? They can't afford to buy a home, so they rent a home. And that creates an increase in the demand for rentals, which actually drives up prices. So often in a crash, rental prices will go up. Which means that if you make sure that your property portfolio is structured in a way that in a crash, you don't go bankrupt, right? The banks don't call in your loans. As long as you're safe, you will actually increase your cash flow, at least possibly. So that is a really good way of, yes, you don't build your asset value because the values are going down, but you're building your cash flow and you're still growing. So it doesn't have the opportunity that cash has that you go in and buy property when they're really cheap, but your property can grow. So it's a good hedge. It's a good safety bet, right? That's why we like real estate. It's good when it goes up. It's okay when it goes down. Stocks.
Great when it goes up, generally not very good when it goes down, right? Because that is what we talk about when there's a crash. It's usually a stock market crash. So if it goes down, it goes down. So make sure you have some here if you think the market is going to go up. But if you think the market's going to go down, that's where you liquidate and get cash. So when the crash comes, you can buy more stocks. Cryptocurrencies, very similar to stocks, but because of the fact that it works more as a hedge to inflation, if you compare it to cash, they don't print in the same way. There are a lot of different projects. So it's kind of like a combination of the stock market and cash market. So it's a good way to kind of diversify. You can take some big wins even in a crash. You just got to know what you're doing, okay? And then commodities has historically, gold, oil, great hedge against, a downturn or an inflation. Not always. So what we say is there is a correlation, not a causation. So you got to make sure you're safe. What's important to understand with all of these is that before you do use all five, you got to know them. So if all you know is cash and maybe you understand stocks, well, start there, right? You start there. You can go and learn real estate. We can help you with that. We have a free course at momentumgift.com. And we'll show you how to do this. You can add and work on those three. Don't get into cryptocurrencies if you don't know how it works. If you're passionate about crypto and you've learned crypto, but you don't know stocks, well, before you get into stocks, make sure you learn stocks too. So you got to understand these. You got to know these before you get into them. I hope that makes sense. Because otherwise, you're setting yourself up for failure. But if you understand and know these, you see how all of these in different markets, commodities generally pretty good in a crash, cryptocurrencies, well, can actually work pretty well in a crash, very good in a boom. Stocks, obviously the definition of boom and crash. Real estate, very good in a boom, works fine in a cash. Cash, not so good in a boom. While everything else is going up in value, it's going down in value, but very good in a crash because then you can buy things cheap. So that is kind of the combination. Obviously, you can add bonds, you can add CDs to this as well to make that combination of assets even more powerful and robust. But I wanted to show you these five here today to make sure that you understand how to put together a portfolio. So I'd love to hear what your portfolio split is. Please comment below, and let's see if we can, as a community, work together to handle these crazy times coming up. Thank you so much for joining us today. Please make sure you subscribe to the Momentum Property Education channel, and please like this video. Because if you like this video, we plant a tree. Yes, for every like we get on any of our YouTube videos, we plant a tree. We're partners to the Eden Reforestation Project, and we want to do our part. So if you click like, we'll plant a tree as a thank you. So thank you so much for being here. I'll see you soon.